This video is for anybody who is currently paying mortgage insurance on their conventional loan. This does not apply to you if you have a government loan, so anybody with a VA, USDA, FHA, this does not apply. This is for conventional only. A friend of mine and awesome realtor that I work with named Spencer Rem called me up the other day and he said, hey, a client just reached out to me. He's asking how he can have his mortgage insurance removed. And that made me think about myself as well. This house that I bought in 2019, it's exploded in value, and I definitely have 20% equity today. So how the heck do we get rid of mortgage insurance since our houses have increased in value so much? So shout out to Spencer for calling me and providing content for this video that I'm recording now. Back to mortgage insurance. So everybody knows that once you have 20% equity in your house, that mortgage insurance can be dropped. So if you buy the house for $300,000, it appraises for $300,000, and you owe less than $240,000 on your mortgage, then you can have that mortgage insurance removed. You just call up your servicer and say, hey guys, I just made a large payment towards my principal, or I've paid down my principal month after month, and now I'm at that threshold. Can you remove the mortgage insurance? Easy peasy. But what if you have at least 20% equity and that's a result of rapid appreciation on your home's value versus you paying the loan down in relation to what you originally borrowed? In this case, things get a little bit more hairy, but it's not too difficult. Say that same house that you bought last year for $300,000 is now worth $400,000. And that's a result of a rapidly appreciating market. What happens when you call up your servicer and say, hey, I don't have 20% equity based on my original purchase price, but I do have it now based on current market value? Mortgage insurance can be canceled in this case, but there's a couple of additional steps. Fannie Mae and Freddie Mac require a seasoning period of 2 years, so you have to have made 24 payments before mortgage insurance can be removed because of market appreciation. The second stipulation, if you've been paying on the mortgage for at least 2 years, is that you do not need to have 20% equity, you actually need 25% equity to have mortgage insurance removed for appreciation purposes. The exception here is that if you've been paying the mortgage for at least 5 years, then it reverts back to having only 20% equity. So if you've been in your loan for at least 2 years and you have 25% equity in your house, then your servicer may very well be able to cancel your mortgage insurance early. It's important to know that your servicer has to validate how much your house is worth today, and they can do that with either a desktop appraisal or a BPO, also known as a broker price opinion. When Spencer called his servicer, they said that the cost of having a BPO done would be $150. And in this case, it was well worth it because the house definitely has enough value and he'll recoup that $150 in just a couple of months. Oh, by the way, also to do this, it's important to know that you have to have a good pay history and the account has to be in good standing. But this applies to a lot of people who have purchased their houses within the past few years, and I'm going to be making phone calls to clients of mine who purchased in 2018, 2019. This is a really good way for a lot of homeowners to save money. I really hope that this helps some people realize that they can have mortgage insurance removed today and you can save some money with your mortgage going forward. This process is handled by your mortgage servicer, but if you have any specific questions or want to get a quick answer and you can't get somebody on the phone quickly, feel free to reach out to me. My cell phone number is 910-742-6886, or you can email me, Justin@acfsmortgages.com. Talk to you soon.